Here's a number for you. 90%. No, that's not the percentage your neighbor's son scored in 12th. That is the percentage of MS Finance graduate who get hired within 6 months. Not a typo, not luck, and definitely not because they're all secretly geniuses. While students from other fields are tweaking their LinkedIn profiles for the 47th time this month, Masters in Finance graduates are busy deciding between offers from top companies like JP Morgan and Goldman Sachs, or weighing careers in investment banking, financial analysis, or FinTech. If you are a sucker for details and worried about the 10%, then don't worry. They are not unemployed. They're on their paths to pursue entrepreneurship in finance. Hello and welcome back to GradRight. And today we are diving into the degree with an ROI so good, it basically prints money. Masters in Finance Fall Intake Edition. But wait, this only works if you don't completely mess up your school selection. Today we are covering everything. Eligibility criteria, admission process, career scope, ROI analysis, and how to pick the right school using data instead of just vibes. Stick around till the end and we'll show you exactly how you can avoid choosing the wrong program. Let's start with the good news. MS Finance programs are surprisingly inclusive. You don't need to be a math wizard who dreams in derivatives. Engineering background? Perfect. You already think analytically. Liberal arts? Even better. Finance needs people who can communicate. Science background? Hedge funds are fighting over quants with your skill set. Let's talk about eligibility. Most MS Finance programs want a GPA more than 7 on a scale of 10, a GMAT score between 600 to 700, or a GRE score above 310. The real eligibility criteria isn't your transcript. It's your commitment to actually researching programs instead of applying to whatever that sounds prestigious. More on that later in the video. The admission process is just like a chess tournament, and here are the steps to make sure you crack it. Step 1. Application essays. Don't write about generic passion for finance. Everyone claims passion. Instead, focus on specific financial problems. Write about market inefficiencies, FinTech disruptions, or risk management challenge that you want to solve. Connect past experiences. Link your engineering background to quantitative finance or liberal arts to client communication. Structure your narrative. Use 4 specific sections: problem identification, why this school, your qualification, and future goals. Be specific about your career goals. Instead of, I want to work in finance, say, I want to develop algorithmic trading strategies for emerging markets. Step 2. Letters of recommendation. Get them from people who've seen your actual work performance and not family connections. Academic recommenders. Professors from quantitative courses who can speak to your analytical abilities. Professional supervisors. Managers who've seen you handle financial crisis, data interpretation, or client relationship. And don't forget to provide context. Give recommenders your resume, the program details, and specific projects that they should highlight. Step 3. GMAT or GRE scores. These aren't measuring your IQ. They are measuring whether you can survive a finance professor throwing derivatives at you at 8 AM on a Monday. Make sure you prep for at least 3 months. Step 4. Application timeline. Strategic timing can make or break your admission chances. First stop, deep research. Begin university shortlisting 8 to 10 months in advance to write targeted essays, not generic ones. Next milestone, lock your scores. Start GMAT or GRE prep 4 to 6 months before deadline. No cramming allowed. Critical phase, application creation. Essays, recommendations, demonstrated interest. Everything comes together here. Decision points. Early deadlines get better scholarships. Regular deadlines in February and March have limited funding. Final milestone, the admit. Earlier applications are reviewed with fresh eyes and full scholarship budgets. That's your competitive advantage. But here's where most students completely mess up their strategy. They nail the essays, ace the GMAT, get perfect recommendation letters, and then apply to completely wrong programs. Here's the problem. You can have a perfect application, but if you're applying to a program that doesn't match your profile, career goals, or financial situation, you are setting yourself up for either rejection or a terrible ROI. This is where GradRight's university selection tool changes the game completely. Instead of guessing which programs fit your background, its AI capabilities analyze your exact profile against 8 million plus data points from real student outcomes. Here's how it works. Upload your GMAT scores, GPA, work experience, and career goals. GradRight's university selection tool matches you with programs where students like you actually succeed. See your admission probability and ROI for each program. Connect with the current students and alumni from your target schools. Get university invites based on your profile match. Let me give you an example. A student with a 3.4 GPA applying to MIT Sloan, which typically takes 3.8 GPA plus, while ignoring excellent programs like Rochester Simon or Boston College that love their profile and offer better scholarships. This is where GradRight's university selection tool completely changes the game. The best part, it's completely free for students. Here is where it gets fun. MS Finance doesn't just open doors, it builds you a private elevator to the penthouse. Here are the kind of job roles that await you after a master's in finance: investment banking, private equity, corporate finance, FinTech. The beauty, these aren't maybe careers. With 90% placement rates, they are pretty much your future. Let's talk numbers. The real return a master's in finance delivers. All-in program costs, tuition plus living is about 70 lakhs. At 9.5%, that's roughly 55,000 a month in EMIs over 12 years. Before the degree, a typical baseline is around 1 lakh a month. Average starting salary after MS Finance, $100,000 in USA, about 7 lakhs a month. That's a 7 times jump from 1 lakh to 7 lakhs a month. But here's where most students mess up the math. They focus on the salary jump but completely underestimate the loan complexity. Let me tell you what usually happens. The traditional loan horror story. Student visits 8 to 10 banks individually over 4 to 6 months. Gets rejected by 3 to 4 banks due to collateral issues. Accepts the first approval at 11 to 12% interest rate. Realizes later they are paying at least 15 to 25 lakh rupees extra over the loan tenure. Most students actually give up during this process and abandon their dreams. This is exactly where GradRight's education loan platform changes everything. It's the world's first education loan bidding platform. Think of it like this. Instead of you running around in banks for loans, they compete to give you the best deal. Here's how it works. Fill your details on the platform. 15 plus lenders, including private banks, public banks, and NBFCs bid on your profile. Compare everything side by side. EMIs, collateral requirements, moratorium periods. Get loan offers with different interest rates, tenures, and processing fees in just 20 minutes. Choose the best offer that fits your financial situation. Compare that to stock market's historical 10% annual return. And suddenly, business school looks like the investment opportunity of a lifetime. The online versus offline debate in master's program is like asking Netflix or cinema. Both work, but the experience is different. Now with the hybrid programs in the mix, it becomes all the more important to know what's right for you. Take a moment, pause the video, and go through this comprehensive breakdown one by one. Choose online if you're working full-time, budget conscious, or geographically constrained. Choose offline if you're making a career change, want maximum networking, or need structured learning. Choose hybrid if you want both flexibility and face-to-face interaction. here's what we just proved. While other degrees hope for good outcomes, MS Finance guarantees them. 90% placement rate, 7 times salary jump, 3 years payback period. These aren't marketing promises. They are mathematical realities. But here's what separates the elite from those who struggle. The successful ones don't leave anything to chance. They research programs like their life depends on it, because it does. They calculate ROI down to the rupee. They apply strategically, not desperately. The ones who fail, they choose programs based on rankings they found on Google. They ignore loan calculation until it's too late. They treat the biggest financial decision of their lives like picking a song for their Instagram story. Your competition isn't sleeping. Right now, someone with your exact profile is researching programs, preparing GMAT, and positioning themselves for scholarship. The question isn't whether MS Finance is worth it. The question is, will you be the one who makes it happen? Or someone who will wonder what could have been? Your move.